Happy New Year, my fellow wealth hackers. This is Erwin Cito bringing you the Truth About Real Estate Investing show. I hope you all had a great and safe, happy holiday. Hopefully, Santa was good to you all. My youngest, Bruce, at age 5, already doesn't believe in Santa. Someone told him back in daycare. Hopefully, no one's listening to this in the car with young children listening. It's probably a good idea that you do, because I find this stuff helpful. I wish I was exposed to this stuff when I was younger. I'd be so much further along in my journey towards financial peace and financial freedom. Anyways, my daughter still believes in Santa, so it's kind of awkward because she's older than my son. She actually asked why Santa left her stocking unstuffed. So we told her that Santa is at high risk for coronavirus, so it's not safe for him to come into our home. That was the end of that. For Christmas, I wanted to get the family something nice, as it's been a great year in terms of for wealth hackers, for investors. Hasn't obviously been the easiest for my kids, having school canceled and whatnot. But those who invested smartly and strategically in things like cash flowing real estate and stock hacking, well, it's been a fantastic year. I had a student from the October course who just messaged me saying he made almost $10,000 in his first month and a half of live stock hacking. Anyways, we do have a financial planner coming on in a few weeks, in Kathleen Vandenberg. I consider her smart money, so I'll hold off giving any financial advice. We're going to do a bit of a review or lessons from 2020 from a financial planning advice and some advice for next year. I'm not a financial planner, but I am a professional realtor and a professional real estate investor. And we had a record year in helping Canadians with their investment real estate just outside the Greater Toronto area, with a heavy focus on cash flow. If you've read anything in the news or listened to this steady stream of successful real estate wealth hackers on this show, then you know it's been a great year for the smart investor. Building wealth is an open book test. The real test is who is reading the book. Our government, and the one in the US, is planning for more record stimulus. Cash will be printed in record numbers. Therefore, cash in our savings accounts will be devalued. Economic theory and best practices have been proven for quite some time is that you should hold hard assets like real estate. Not just any real estate, preferably cash flowing real estate, so someone else pays those bills. From a quick search of the Real Estate Board of Greater Vancouver, the November 2020 prices for detached homes is up, wait for it, 28.6% from last year. Over that same time period, the Toronto Real Estate Board is reporting detached prices are up 13.3%. How's that for inflation? That doesn't make the mainstream media. Living costs are more than ever. Hopefully you, the listener, already owns hard assets or have plans to acquire more. Knowing that what a great small business owning real estate is, I started investing in real estate in 2005 and started in 2010 what eventually became the award-winning iWin Real Estate team to help everyday, hardworking Canadians build wealth. This is why we teach the number one real estate investment strategy for free. Exactly how our clients and ourselves, how we invest in cash flowing real estate just outside the GTA. Hopefully it's not a spoiler alert. We focus a lot on single family homes and adding basement apartments to them. That's what we teach at the free training. That is for beginners. For those who want to continue deeper with us on this journey, we offer our monthly iWin meetings for a nominal fee, and 100% of the proceeds go to charity. Clients obviously attend for free. We normally would do these meetings in person. We used to do a small number of clients in person, but for January, that's out the window because there's this whole thing called the virus going around. So we'll host some of the meetings virtually for now. This January, Cherry, my wife, who's a professional accountant, a CPA, is presenting on whole life insurance, something that we just bought for ourselves. We invested in it for ourselves. Together with insurance expert Jason Lowe, they will be on hand to explain the concept of infinite banking, how we can. So I'm no expert at this stuff, so I'm tuning in as well to understand this because we're putting quite a bit of money into it. How we can own insurance so our kids aren't overburdened with taxes when we pass on to them our sizable number of assets, but also how we can leverage the whole life insurance plan to invest more, assuming that you have means to earn more than the paltry interest rate of 6% that I have to pay to borrow those funds. 6%, folks. We also have Anna Scott on hand, who's a professional real estate investor. For those of you from the Keyspire community, you know her well. She's a mortgage agent, and she's sharing a behind the scenes look at some real private lending deals, some past deals that she's done with clients. And we have my lawyer on hand, Hussein Kadradi, who will be reviewing social media posts that I've selected from people looking to raise capital. Now, I like all these people, but I'm always looking to learn myself, and if there's any possible implications by the Ontario Securities Commission from people posting on social media looking to raise capital. I know lots of people who successfully raise capital over Facebook and Instagram. Make sure you do it without getting in trouble. If you're interested, you can get more details at www.investortraining.ca. Again, that's www.investortraining.ca to get on my email list, and you'll get emails about all of our events when they're happening, and also for, we do this once a month as well for the ongoing iWin monthly meetings. Also, you'll find the presentation I gave to over 1,600 investors in 2019 on how I personally invest for my kids so that they don't have to go into crazy debt when they go to university or when they buy their first home. Investortraining.ca. Cash flowing real estate, in my experience, is for building wealth. For cash flow, I'm stock hacking, and our students of Stock Hacker Academy are just killing it. In classic Canadian fashion, no one likes to brag on social media, but my DMs are full of thanks and screen captures of their returns. One of our most conservative clients, Nick DiTomaso, who actually came into the office to visit to drop off presents and stuff. Please, that's not an invitation to come in. We're not looking for more presents. Our kitchen table is completely covered by sweet treats while I'm in the middle of a 8-week challenge to a health challenge around fitness. So we may be donating a lot of these sweets, or I just wait for my staff to eat them all. So Nick, who is a beginner and very conservative investor, he's made 35% in 9 months. My cousin Chubby just had his best month in December with $6,700 in returns. A business mentor of mine cleared $30,000 this month, and another student of ours who has what I call stock hacker problems. He made too much money in his personal trading account, and now he wants to open a corporate account to minimize his taxes going forward. This is actually a very common problem among our students of Stock Hacker Academy. So do what you like, folks. Of course, past does not predict future performance. This is not for everyone, but I'm truly astounded by people's results. Personally, Cherry and I have averaged 10% returns in December alone, and that's way more cash flow than our entire real estate portfolio for the year. Past students and guests of this show, they're calling this a game changer. And if you'd like to learn more, I am giving free demonstrations in January. Simply go to www.stockhackeracademy.ca/demo to register for the next demonstration. And it's free, doing it for free. I honestly love sharing this stuff because it's making such a big difference in so many people's lives. All right, so I'll be demonstrating how it works, how stock hacking works as much as I can in about 90 minutes, and I'll be giving an overview of what the course looks like. And we've beefed it out significantly. As I think you guys know, I'm a big student and fan of continuous improvement. As the way of the wealth hacker, my job, which is my business, funded my real estate purchases. My real estate investments were refinanced to buy more houses, and then these same houses are providing me equity via refinancing, and that's how I funded my stock hacker bankroll. My greatest source of cash flow is now funded by quote unquote house money, and I'm not trying to impress anyone, but I'm rather trying to express what this new cash flow can do. My 1 week of cash flow last week paid for my Christmas present to the family and my mom. I'm taking them all on a Disney World and Disney Cruise vacation in 2022. I know it sounds far away, but when else can we safely travel? The flight, of course, will be paid for with my travel points because I'm still that frugal. It just makes sense. But again, I am frugal. I don't like spending money, but I was able to convince myself that this expense was okay to pay for because, again, it was just 1 week's cash flow. But enough about me. This week we have my old friend Martin Kuev on the show. Martin, like many, had a young family, a well-paying job, started a side hustle investing in condos, progressed into renovating single-family homes to create legal basement apartments, then again leveling up more recently into some serious apartment building renovations for highest and best values. So these are like 9-plex, 12-plex, and he's trying to even add more suites as well. Definitely innovative stuff. So I hope you enjoy this interview as much as I did. We talk about life, the challenges of Martin leaving his corporate job, a well-paying corporate job, just after having twins. So he had his second and third child and then decided to quit his really good paying job. Martin shares about his new side hustle he learned from Stock Hacker Academy and how he earned 6 figures already in his first year. We chat a bit about cryptocurrency, as Martin's close friend is actually very high up at Ethereum. Pretty interesting stuff. For anyone who's interested, we will be having more guests around the subject of cryptocurrency in the near future. I hope you're interested in this subject as much as I am. And without further ado, I give you Martin Kuev. Hey, Martin, what's keeping you busy these days?
Hey, Erwin. Thanks for having me on. A lot of things keep me busy. As you know, very much like yourself, I'm a full-time real estate investor. We buy single-family homes with clients, and we also have apartment buildings as well. We purchased 6 apartment buildings in the last couple of years. And on the other side that was introduced through you is stock hacking. So I've been doing that for a little less than a year. I started right at the turn of 2020, and it's become for sure a game changer. And within my investing arsenal, it's right up there with real estate investment. I'm always be a real estate investor, but this has for sure become a staple within my investing outlook as well.
I know, because I saw that you passed the 6-figure mark already as a beginner.
I did. I think I passed that in 8 months. And you know, you got to look at what you can do in this market, which was a recovery of basically going down and going right back up. That's not sustainable. So you're not going to make that, 100 grand in 8 months in regular times, because we had such a shoot up. But you got to look at, making 1 to 3% a month. It shouldn't be out of realm for most people doing this strategy.
Mm-hmm. And just for the listeners' benefit, Martin and I are not licensed experts at this at all.
No,
We're just we're sharing our personal opinions and historical facts. Past does not predict the future. So yeah, please go seek professional advice. We are not professionals. We can give all the advice in the world on real estate because we're both licensed real estate professionals, though.
Same thing for real estate. Go talk to a lawyer, go talk to an accountant, because you want to get advice from a professional, obviously.
Yeah. Just hopefully that they also make 6 figures in their investments.
Absolutely, very true.
And okay, there's lots to unpack there with your introduction. And also you have 3 kids? Is it 3?
I got 3 kids. Yeah. I got twins, and then one that's a little bit older, but they're all within a year and a half apart. So we didn't, that wasn't in the brochure of parenting. So it kind of hit us in the face, but we're a few years in now. So it's, there's definitely a light at the end of the tunnel.
How old are the twins now?
The twins, they are going to be 6 in January, and the older one is 7. Yeah.
Yeah, because when I met
and you remember that, I
just
think we
had
met
the twins.
Sorry?
I forget. It was around the time the twins were born that we met.
That was when it was about 6 years ago when I really morphed my corporate career and moved over to real estate. And it was, you kind of funny, you talk about entrepreneurship and you say, there's never a right time. There's for sure never a right time. And that was not the right time for me. But, you can give yourself every excuse in the world. And, it was something that I knew I had to do. And it was something that I had enough knowledge and information that I was going to go forward and succeed within it. So I pushed the button.
Okay. So let's go back then. How old were you, and how old were the kids when you resigned your corporate job in marketing?
I think 30,
you worked in marketing for a pretty large company, did you not?
I worked for Coke, I worked for Nestle, I worked for Kraft, I've worked in North America and in Australia, I've worked across the globe as well. So 20 years I spent in the corporate world, all in senior level executive positions. So to the point I was head of marketing for Barilla Canada here. That was my last job that I quit.
Right. And that's one of the largest pasta producers in the world, isn't it?
That's the largest pasta producer in the world, yeah. Based out
the largest. Okay, thank you.
Yeah.
So you walked away from quite a lot. like
I
a
did.
20-year
Oh
career.
yeah, definitely. You're walking away from a good six-figure golden handcuffs to something that's unknown with three kids that are newborn. So I went from being very, very steady and stable to, there's fear. There's no question. Was I fearful? Yeah, for sure. As I look back, would I have done it any other way? No, I wouldn't have.
That was my next question. Would you have done it sooner? Would you preferably done it sooner, or is this the path you would recommend to others?
Oh, I wouldn't recommend this path. That was we were just getting to know each other at that time. You probably saw how stressed out I was. It was
Oh
not
yeah.
the fear for me. Doing it in terms of building a brand, building a real estate brand, still working full time for. I think I put a 3-year plan out for myself in terms of transitioning from the corporate life to real estate, and I
Mhm.
quit within a year. And it was just everything I did was putting myself into that, becoming a realtor, becoming an investor, and
Mhm.
then putting my money where my mouth was basically refinancing everything I had. And I think I went out and I bought 5 homes in the span of 3 weeks, all requiring substantial renovations. So it was all within that year. It was I would not recommend everybody do that, but
Right.
manage you want to manage both sides, but on the other side, don't be too complacent and comfortable. You got to be uncomfortable to move ahead.
It sounds like you had at least built up savings and capital in order to be able to invest on your own. Sorry, just to clarify, these 5 homes, was it all your own, or was that in
All my own,
partners?
yes, correct. Yeah,
All your
myself and my
own.
wife.
Okay.
All my own, yeah.
Of course. We talk as if we're on our own, but yeah, the partners, they get
But no, I
half.
didn't have any JV partners for those ones. I had to go out and basically, I think I first started investing, it was like 2002. But then when I started getting joint venture partners, my first joint venture partners were my sisters.
Mhm.
And I think that was in, 2010, something around there. And then
Mhm.
slowly built up but it took me a good, I'd say 15 years. I had the knowledge in real estate investment, but to take the action, it took a long time for me to say, okay, I'm going from here. I'm very complacent. I'm very comfortable within my life. I knew exactly what I'm making, but where am I spending my time? I was living at the airport. I was flying out every 2 weeks. And then once the first child came, I'm like, okay, things are changing for myself. Work is not getting any less intensive from a time perspective. And then I flip back and I go here and I go, financially, yes, check mark. Absolutely, you're making much more financially. From a time perspective, much less time spent for working for somebody else. But for myself, I'm always there for drop off. I'm always there for pickup, and I'm a staple in my kids' lives. And that's probably the most thing that's important to me.
Right. Was that one of the reasons why you left the corporate world? Because you
Yes,
mentioned flying a lot. Like, how was your health and your sleep and all those other things as well?
health, everything was fine. That first year I didn't get much sleep with twins, but ironically, something I don't share a lot of is that 6 weeks after those twins were born, my father unfortunately passed away suddenly. um, that was probably the kick in my ass to do something, is seeing my father go through what he did, and knowing that he in his own mind I would think maybe wasn't, um, he was successful, but I don't think he felt he was. And that was kind of the big thing that drove me, is seeing that he didn't take the chance. And even if he had the knowledge, there was a lot of fear built up in there, in terms of work, in terms of trying something new, in terms of trying a business. And I knew I had enough knowledge, I had enough nest egg there that if I fall flat on my face, I can still go back. I was getting to the point, being in my late 30s, going, okay, I'm on the cusp in terms of starting to get middle age, and will companies want to
Mhm.
hire me for
Mhm.
younger talent? But that was probably the nudge that I needed to go, hey, I have to do this. If I don't, I'm likely going to regret it. And at that point, I was investing for quite a while, so I knew I wasn't putting out something on a leap of faith. It was something that I knew I built that legwork in there, so I had a pretty good knowledge that, hey, I was going to make something of it.
Right, right. That's pretty. Thank you for sharing. Um, where should we go next? How do you how so we talked about time, and the restraints that you have on time. What takes up most of your time now between being a realtor, slash coach to investors, apartment building investor, and stock hacking, and I'm not sure what else you got on the go. You still doing martial arts too?
Still doing, sorry?
Martial arts?
Martial arts, yeah, not as much as I used to now. A lot of the kids' activities I make it out to, not in these times, but in normal times, our kids are usually like swimming, gymnastics. They're in
Yeah.
camp, and then we're bringing those things. But for myself, we still have, of those 6 apartment buildings, we bought them over the last 2 years. So I'm still stabilizing 4 of them. So we're going through heavy renovations. We're waiting for permits from the city of Hamilton that we've been waiting, I think, a good 7 or 8 months in one of our 16 unit apartment buildings. So we're still heavily active in terms of that renovation stage on these apartment buildings. And then still actively working with clients out
Hmm.
there in terms of bringing them. We're kind of moving in terms of, with Hamilton, we have Durham region. We're starting to, as you probably know, needing to move outwards.
Yeah.
When we look back at real estate investment, 30 years ago, people were doing what we're doing in our own backyard in Toronto, and you're going to get pushed out. The higher prices go, and then the rental rates don't go up as high. You are
Hmm.
pushed out. So Brantford, Peterborough, Welland, those are kind of going to be the new hotspots for sure moving forward. But
Hmm.
that's keeping me busy on the real estate front, and obviously on the stock side of things. Being a new investor over the last year, I wouldn't say it was quite 30 minutes a day, but definitely not a full-time job
Hmm.
by no stretch of the means. I'm not a day trader. It doesn't engulf all my thoughts or anything like that.
Hmm.
But it's a good something that deserves more priority and more of my attention to, because of what it brings out for a limited amount of time. And that's what real estate was.
Hmm.
You can start a business, you can work for another company. It's what is going to give you the quickest amount of wealth generation for I wouldn't say least amount of your time, but yeah, you want to be as efficient as possible.
Hmm. This is pretty cool because what I'm discovering about our community is um, 6 figures is a good goal for anything, right? 6 figure income, 6 figure side hustles. So I have an idea of how successful you are as a realtor, so I'm pretty sure that's a 6 figure business for you. I'm pretty confident that your real estate generates you at least 6 figures of net worth every year, and you just passed 6 figures for your stock hacking. So you have at least three that I know of, at least three 6 figure income streams. Not bad, eh?
Not bad, and that's what they teach with entrepreneurism, is you want multiple streams of income. And that was when I first started, you were much more further along the path in terms of real estate than I was, and I had to catch up. But I always knew in the back of my mind it wasn't going to be, I'm tied to one company or I'm tied to one thing, and that's going to be my only driver. And as
Yeah.
you hit it, yeah, realtor, I have my own investments, I have stock hacking, I have different pools I can pick from depending on what's going to give me the most amount of return, and what am I enjoying the most.
Hmm.
I can sit on my apartment buildings and not do anything, but I enjoy that. I enjoy being an investment realtor and seeing people. I've had several people that work with me that have quit their job. That's
Hmm.
much more joyous for me than
Hmm.
putting another kitchen suite in there, or purchasing another apartment. It's seeing someone else succeed, and that's why we're so big on the education. We have our
Hmm.
meetups, and
Hmm.
seeing people get up on that path, knowing that your corporate job, even if you're making 100,000 or 150 grand a year, it doesn't need to be your be all end all. It's, you kind of make it your be all end all like that. There's so much more out there, but fear is kind of stopping us.
Now, do you remember your first investment property?
I do, yeah.
What was it?
It
What year
was
was
it was a
this?
condo. I remember I bought 2 condos. I came back from Australia, and I remember I came back from Australia. My friends had mortgages, and they were kind of further along in life. And I worked in Australia, but I had no assets. I had no mortgages, but I had a lot of memories, which was great. So I went out, and I think I landed on my feet pretty quickly here. I think I joined Coca-Cola right when I came back over here. And I went out and I bought 1 condo. Then I kind of house hacked in a sense. I went and took possession of that condo. I rented it out. I bought another condo and went in and moved with my buddy. And I had those condos. And I think within a year, I made a good 160 grand. And I sold them both. And I didn't do anything in real estate investment. I'd probably save for another 10 years on that. Even though exactly what I did is you get back, and I started getting promoted. I met who's my now wife at that time too. So life got in the way of things that have, but if I look back and things we tell new investors, we say, what's the 2 biggest regrets of any real estate investor? It's damn, I didn't start early enough, and it's damn, I sold that property. And I did both of
Yeah.
those things. I could have did them a lot sooner.
Sorry, what was the year you bought those two condos?
2002.
Where were they?
They're downtown. They're Liberty Village area, and I remember my financial advisor at the time, who I do not have a financial advisor now. Don't go in it. The bubble is going to burst. Don't go into real estate. And it's funny. We do a lot of blogs and things like that in terms of or even here, where we get your financial advice from. Where you get your advice from real estate or financial or anything like that, is look at what their motive is in terms of giving you that advice.
Hmm.
So it goes down to the path of some financial advisors, exactly as you said. Are they making six figures themselves on the investments that they're trying to put out to you? And sometimes they're not.
It's oftentimes they're not. Do you have any idea what those places are worth today?
Yeah.
Or is that a painful question?
The first one I bought for $199. It was the bedroom. Two-bedroom condo.
2 bedroom?
Yeah, it was a two-bedroom. Yeah.
Okay, just to repeat that, folks, the 2 bedrooms for $199 in Liberty Village, which is a very nice part of Toronto, on the west side of downtown Toronto.
And then later on, I think later on after I took possession of that, it was about 7 months later, I bought another one for $199. It was a one-bedroom. So it's kind of funny. You talk about new investors or people that buy that first property and they buy it for 200,000, or buy it for 300,000, and prices go up the next year and like, wait, prices are too high. I can't buy anything. And then you have so many people that are so focused on purchase price. Yeah, they have to look at every scenario, every variable. The rental rates have gone up too. Interest rates have come down. If you look at all those things together, people were investing in the 80s when there was a 20% interest rate. So you have to look at all the things together rather than just what's the price of that home or what are interest rates today. It's you got to marry those things.
Yeah, because I like, even my own personal experience like right now is like, oh, Bitcoin's expensive. I can't wait for it to get cheaper. I have problems.
The first time Bitcoin was introduced to me, I think it was $90.
Oops.
I was told to get in now, and this was going back to 2014 or something, and I didn't do it.
On the other side of it, like I've had a lot of I've been on the end of a lot of bad advice. I've been smart to turn down the most of it though.
Yeah, and it was I'm privileged to be friends with one of the founders of Ethereum, and he was telling us, and just jokingly, I'm on this new thing called Bitcoin, and we were, I think, watching a UFC fight, and we're like, Bitcoin, what's that? This is crap. And very similar, when you don't know enough about something, you basically discount it right away, like real estate investment. Oh no, I want tenants. You throw it away. And I did exactly that with cryptocurrencies. And even now, to this day, I look at cryptocurrencies and I look at it as, if you have the money to invest, there is a certain risk element for sure. Is the economy, is technology moving down that path? Yeah, I think so. When and if that return on investment is going to come, that's a whole question mark for me. And if I look at real estate and stock hacking, that's much more predictable to me. So I look at mine as terms of what is the lowest probability of failure, and that's how I do my investing. And I know within stock hacking, I can pick exactly what tolerance I want within risk. And I know within real estate investing is, what's a doomsday scenario for us in investing? What if Ontario becomes a ghost town? It could happen. We're in a pandemic right now, but the likelihood of that happening is extremely low.
Yeah, if we it becomes like Walking Dead.
It's kind of like Walking Dead. Yeah.
I don't really know what the scenario that happens, but.
And real estate wouldn't be my first priority if that happened.
No, we'd be accumulating weapons and figuring out how to eat. Yeah. So what did your friend say? What's his name? The gentleman that you know from Ethereum?
Anthony Diorio.
And how do you know him?
He's a friend, actually. My best man in my wedding went to university with him. So my friend that I've known since grade 5, we went to separate universities, and then he became close friends with Anthony at Ryerson. And then we always became friends after that.
Is he the richest guy you know personally then?
I think he is now. I think I looked him up. I think when I was getting into real estate and I was saying, hey, I'm into real estate. And I think he looked at me going, I think I got a much more other options out there. Because I think at that time when I reached out, I hadn't talked to him in about 2 years. And I think he made millions for sure on just on Bitcoin alone. He sold one business. He didn't just invest in Bitcoin. He created Decentral. He was the focal point of not just Bitcoin, but cryptocurrencies in Canada.
Mhm.
If you Google him, and I think when I looked him up, he was Forbes top 8 richest in cryptocurrency. And I'm like, oh my gosh, I know this guy.
I remember you were telling me about him. Didn't he renovate an office in downtown Toronto or something?
He did. He owned in one of the, I can't remember which one, but he owned the first 4 floors, and he made that his office in Decentral. So he created the Jack's Wallet. He created Jack's Liberty. He had a big stake that wasn't just, hey, I made a lot of money in Bitcoin, but he also developed things. He developed Ethereum. That was his first thing he did when he built that office in Decentral. He met Vladimir in one of his meetups. He started a meetup, just like real estate investing. He started a Bitcoin meetup, and he met the guy who wrote Ethereum. And he said, "Hey, there's something here." And then he put money in. He got other people in cryptocurrency, and that's kind of now. He already made millions off Bitcoin, but then he did something with it, and he actually went out and built a business around it. And that was where, you have a lot of people, and even him and me are very similar in that sense. We were both entrepreneurs. We had things that worked, had things that didn't work,
Yeah.
and he stuck with it, and it was something that really, really hit. And look, you look at where he is now, and I think at one point a couple of years ago, he bought the most expensive condo in Canada.
Did you sell to him? Bro, I'm an agent.
I've been in it though. It's massive. It's for sure massive. So,
You know how much it cost?
how much? Sorry.
How much did it cost? Do you know?
I think it was 28 mil, something like that. And his condo fees were like 17 grand a month or something like that.
Yeah, okay. That's a lot of money.
It was a lot. Yeah, for sure, for sure. It's in Toronto, and yeah, so he's got a few. And I talked to him about real estate. He's like, I just pay cash for everything now. I don't believe in leverage. And that's a whole real estate investing. We're not going to get an ROI without leverage. And he's just at the point in life where I don't need leverage. I'll just buy it outright.
Yeah, I guess it's not worth his time to sign the paperwork or get qualified for a mortgage. Like you and I know how difficult it is to
You don't
qualify for
need to go through
mortgages.
that anymore. It's one of those things. I put real estate in front of him, and you quickly realize that is such a low priority for him in terms of everything that he has going on, and the win is much greater when you're in Bitcoin, and you see the amount of winning that he's had.
Hmm. Awesome.
Now,
Are you
mind you, on his
investing?
end too, I remember him talking to me going, "Hey, I've lost over several hundred million in net worth when Bitcoin all went down too." So he was upwards of 700 million to $1 billion was net worth, I think was published in Forbes, but he lost several hundred million after that on paper. Still nothing to
Still.
laugh about, but you're like the next day you can lose several hundred million. So still.
Right. Yeah, but he's lost more money than most of us will ever make in our lives.
Absolutely. No question.
and he's he's made more. And for the listeners' benefit, the Bitcoin's at all new highs. So even though he lost all that money, he's recovered more than and made a lot more.
It is, yeah, yeah. And I finally got into it, and I got in good timing, bad timing, like right before it shot up, and I just didn't sell in time. But and I got hit Quadrica. I was within Quadrica as well, and they went up and they went down. But I still have some. I hold some Ethereum, and I hold some other small ones. But that was never a strategy for me.
Mhm.
It was more of, hey, I have some money that's some side investment play money that, hey, if it goes, it goes, it's
Yeah,
gone.
yeah.
But it's nothing that I would invest that like I did with my children. I knew when I went into real estate investment, I knew this was for my children, and I knew exactly what I was getting into before I went in there. Stock hacking as well, same thing. Is extremely. I pick extremely low strike prices.
Hmm.
I'm extremely conservative in terms of what I do,
Hmm.
and probably less so than the people around me, or more so conservative than the people around me.
Hmm. Yeah, I view crypto as more of an insurance policy. Like I categorize it with my with precious metals, as in gold and silver. It's more of an insurance policy. It's not an
Right,
investment
right.
to me. A hedge, a hedge. Awesome. Let's talk about apartment buildings. So you talked about you originally started in buying condos, and then you moved to single family homes. I believe you duplexed a lot of them too. Wasn't that your strategy?
I did, yeah, yeah. Right when they first allowed duplexing, when I first bought them, they didn't allow any duplexing.
Hmm.
Not that they didn't allow it, Ontario allowed it, but as you know, the bylaws for each municipality were just very hard. They made it very difficult.
Hmm.
The building code says your ceiling height is 6'5", and it needs to be, but municipalities say no, it needs to be 6'11". There's not a lot of basements that allow you to do that. So most of the stuff when I first started was illegal basement unit, and I think I got served notice on 4 of those, and I thought, okay, there goes my investing career. I'm gone. I'm done with real estate. And then you really realize quickly that the city wants to work with you, and they need this. They need density, and everything I do now is completely legal. Not that I wouldn't have before. It just the option to do it legal with the municipality didn't exist at the time.
Yeah.
So I found that the city was great to work with,
Hmm.
and yeah, did the duplexing thing. So basically, started out in condos and then moved to the duplexing, and then eventually got into apartment buildings.
So actually, I meant to ask this earlier. Why did you invest in? Why did the original decision to invest in real estate? Did you have like you didn't have kids when you first bought the condos?
No, no, I didn't. I always real estate. I had a bug in my head. I'd say since I was a kid. I had close family friends of ours that they moved to Canada along with my parents. My parents are immigrants. They came here. My dad didn't know English. They sold Tupperware at the beginning. I lived in an apartment my entire life. Like I didn't know anything of what wealth was. Very, I'd say, middle lower income bringing up. And then we had this family that moved here with us, exactly same standard in terms of corporate jobs. But they bought a house. They had no furniture in it. They had 2 kids, and then immediately when they could, they bought another home. And they were, young when they moved here, and they had 2 kids with them as well. And they retired at 55, moved back to the Czech Republic, owned an apartment building there, and also had several properties over here. I don't think they ever made more than 50, 60 grand a year. And they did that just by knowing what levers they have on the outside. Like when their first house they lived in, they had no furniture.
Hmm.
They knew what
Hmm.
real estate was, and I didn't understand real estate at the time, but I knew what they did with real estate. And I'd say before 2002, even when I was in university, I had the opportunity to buy I had 6 guys, and we talk about this every day now today, as we had this home that was worth about 120 grand. I just looked on, now it's being developed up. I went to Laurier, and it was on sale last year for 1.6 million just for a house to be developed on. So I knew that the appreciation was there, but I didn't want to put something into invest and hope for the rest, like gambling. So I wanted to know that, hey, first of all, do I know that it's like Wayne Gretzky says, do I know that where the puck is going to be, that's where I want to go?
Hmm.
And then is there a way that you can do this by not bleeding every single month? And so when I first
Hmm.
got into it, I just want to get into it. So you're bleeding every month in a condo. Back then you were kind of breaking even, but nowadays you probably can't do it, especially in Toronto or an urban city, or at least it's difficult to do.
Hmm.
And that was eventually why I moved up into duplexing. And
Hmm.
you go, everybody doing it before was single family homes. You cash flowed, you're fine. It's what are the levers that the economy give you that you have to do? And duplexing wasn't that everybody ran out to want to do it, but you kind of had to do it. You got to the point of needing to do it, because otherwise your financials wouldn't work. So that was kind of the progression of what I had from condos over to single family homes, and then eventually you get to the point of it's the old saying in real estate: you make your money in single family homes and you park it in multifamily homes, and that's kind of the same path I did, knowing that for the first few years your ROI is not going to be as high on a
Hmm.
multifamily. Um, it's more in the longevity of it. So you park your money into it for something later on, even though now with our single families, we still make a higher ROI, but that's more short term because of how multifamily is valued and analyzed by lenders as well, and how much you can pull out. So that's a
Hmm.
much deeper discussion.
Hopefully, you have time for that. But I want to ask you another question on the duplexes. Like you mentioned, like it's not like people don't want to do it. Like, it takes capital, it takes time, it takes effort, right? How much time do you find it takes to turn around a duplex? So you buy it, you intend to duplex it. How soon can you rent it out as a duplex?
We usually tell someone, and if the clouds align, you can probably do it within 3 months, from getting possession, getting your permits, doing your renovations, and getting to that refinance. However, real estate is not a straight line. You don't know if you're going to get there quicker. So we always tell someone between 3 and 6 months, and it
Hmm.
usually nets out
Hmm.
to something around 4, um, Well, you can do a lot more in 3. Like now we do these things a lot quicker. Where my first one, I think my first one took me over 7 months to do. And you're
Yeah,
trying to
we
find
were all
contractors.
learning.
You're doing it yourself, and you
Everyone
become
was
more and
learning,
more efficient.
including
Everyone,
the
yeah,
inspectors. The inspectors were learning too.
they are too. Many of them. So it takes time, but doing it as many times as both of us have done it, you build up that team, and you have a really good confidence in that team,
Yeah.
and you can go out and basically say, I know exactly what it's going to cost. I know what my timeline is going to be. COVID hit, so getting a permit from the city has been tough. I have a permit, still waiting on a permit from downtown Hamilton, and we put that permit in January, and we're now in December. It's for a 16-unit apartment building, but we still don't have a permit. And you're burning money every single month on that. Is the investment still going to be profitable? It is, but it's something that you can't foresee. No one could foresee this pandemic coming, but how can you react to it? And that's kind of what you do with stock hacking. And even with what we did with this one is we have the time. Can we add more units in here? Is there something else we can do with the property to boost that income? Because we are burning money. But luckily for us is there hasn't been a major correction, or even if there is a correction on a single family home front, typically apartment buildings don't follow that same trend because the rental, if people aren't buying homes, people are renting homes, and typically you don't see rents drop off like home prices were. So the apartment buildings typically maintain their value during recessionary periods or low interest rate or higher interest rate periods, things like that, when people aren't buying.
How did the apartment building rental market behave during the pandemic? Like, did people
It
just
was
stay
at the
put?
beginning we were scared. Like we
Who
had a few
wasn't
people that
scared?
went on payment plans, but
Yeah,
sorry.
yeah. Who wasn't scared?
We were all scared. I think every landlord was scared.
Yeah,
Are we going to
we all
get
need
paid?
rent.
And and that was the thing. As I look back at being a building investor, and if I owned a restaurant, I would be completely like scared out of my mind.
Yeah.
And I know a lot of people that got hit hard and their businesses are down, where we're essential. Everyone's human. I looked at it as a learning experience, and we approached every one of our tenants going, look, this is unprecedented times. We're in this together. If you need help, let us help. We're going to go on a payment plan, but that doesn't mean rent is free. So if you have Ford coming out and saying, hey, you don't got to pay rent, we still have to have a business here. There's still expenses we have to pay. However, we're human, and we want to work with everybody that is one of our tenants, and we were proactive about it. And we did have some people that were on a payment plan. I think out of all of our doors, I think we had well over 100 when the pandemic hit. And I think 1 or 2 we had to go to the LTB, but other than that, we worked with them, and it was actually okay. We came out rather unscathed with the rental market. It took a little longer, especially when we were locked down, to rent things out, as we're experiencing right now, and being a sort of a semi-lockdown situation now. But that's all with it. Is that going to change when we get to regular times? I look at the real estate market and I go, there could be a correction. I don't personally think there's going to be a correction, maybe just a stagnation. However, Trudeau came out and said, we're not taking the foot off the gas on immigration. Immigration is one of the biggest things we look at. And, he's accelerating immigration, and immigration has fueled real estate for the last several decades, actually. So it's going to, in my personal opinion, likely going to continue.
Were there any programs to help apartment building investors? Like, for example, I think everyone knows that you could defer mortgages on single family homes. Was anything available for that for apartment buildings?
You could have did it for apartment buildings as well. You could have, the deferral option was there depending on the lender that you had. We personally didn't have to. We didn't take it until we needed to. There was the option to get some free money from the government in terms of, I think, 40,000, and now becomes 60,000 for a small business owner. Luckily, I look at myself and, knock on wood, I'm not in a financial situation that I needed to do that. So that money is better used somewhere else. Could I have made use of that 40,000? Yeah, I probably could have. Some would have been even, I wouldn't have to pay back all of it, but we didn't go down that path. We didn't go down the deferral path. We would have if we needed to, but all of our buildings were still at a point of, we're in stabilization mode. So some of them were sitting empty, for example. And then we had others that we were still paying expenses. So there was no need for us to go on a deferral, because even if you're going on a deferral, you're going to eventually owe that money back anyway, just like anybody in a payment plan for rent. So it's not like that money is magically, expense is gone. You're still going to pay for it. So we just decided to keep the expense going.
Right. I was hoping to use it like for like a private loan type thing, renovate and then refi and then give the government back the money.
You could, and I think
I don't know what the rules
down
are. I
there.
honestly don't know what's allowed, but that I think that is like I'm no expert, but that makes sense. You're going to inject money into the economy because you're going to renovate, you're going to hire people to do work, right? You're going to make a place better, more usable, more livable, right?
Hmm.
Increase the value of the property, pay more taxes. You're employing people. Like that's kind of what the government always usually tries to do when they stimulate.
They do, very true, and that's we're waiting on the permit still from Hamilton, but for
Uh-huh.
the most part, they want all this. They do
Yeah.
want this, and they do want you to succeed. They do want their neighborhoods to change. So yeah.
Can you describe your apartment building strategy and then how this permit fits into that?
Sure. Typically, what we do is we do it. The strategy hasn't changed. It's still the Burr model. It's what
Mm-hmm.
can we do and add value to. So we're typically buying an apartment building that has one of two things or both. One is rents. Current rents are really below market, so there's a lot of uptick in terms of rents. The flip side of that is most apartment building sellers are trying to sell for projected income rather than what they actually are bringing in as a business. So that's the hard part. So that's why you have to look at your numbers and make sure they
Yeah.
work. The other part of it is value add. In most of our apartment buildings, especially our first one, we bought one up in Midland, and it was a 23 unit one. And when it was built, I think it was built in the 40s or 60s, I can't recall. But massive floor plans. So basically, all of our one bedrooms became two bedrooms because our dining rooms became another bedroom. So if you can add another bedroom in there, you're going to command more rent. So anything for us to be able to pull up more value in it, either from putting an extra bedroom in there or adding another unit in there, that's what we would do. So most that we've had, we took one in Hamilton, 8 unit, single bedroom. They all became two bedroom. We took another one it was a legal 11 unit. We're making a 16 unit. That's the one that we're waiting on because there's development fees associated to it. And you're adding an additional number of units within it. So that's the holdup with the city of Hamilton. And it
Mm-hmm.
requires, they look at it like a development. So mechanical drawings, engineers drawing, plumbing, all of that you need to go through. But I'd say the strategy hasn't changed. It's just how you're going to implement that and execute, and it's on a much larger scale with apartment buildings because you have things like environmentals. You may spend 10 grand in a building and walk away from it because you see something that you don't like. Now, typically with a single family home, 9 times out of 10, I'm going to move forward with that because I know my numbers before I even put an offer onto a property.
Mm-hmm.
With an apartment building, I got to dish out some stuff before I have all that information. And if I'm going something, say a firm offer on a home, I put firm offers on a home many times, and I don't shy away from it. Any new investors would go, hey, I want to put in an inspection clause, and absolutely, if you don't have the comfort level. However, if you're not in a bidding war situation, just manage your price, and if you come down in price and you have no clauses, at least I've had many times I didn't put an inspection clause in there, but my offer was 15 grand lower, and I knew that I had a 15 grand buffer of anything else that was unforeseen behind the walls that I would see, knowing that I'm likely to spend 100 grand in this renovation anyway. So you do buffer it in. It's a lot easier to do in a single family home. Multifamily, you don't have that luxury. You could, one little issue can turn out to be massive.
Right. Because when you bought that 23 unit, for example, like you didn't see all the units before you bought it, right?
Not every single one. We did see them all before the due diligence phase was up. So we usually had a 30-day due diligence. So we would
Mm-hmm.
go unit by unit by unit. We have an inspector go through. So you still have a due diligence phase and we could walk away. But during that due diligence, you have to do an appraisal. You have to do an environmental. You got to do an inspection. And they may cost you a couple $100 or a few $100 for a single family home. They're in the thousands
Right.
if you go into a multifamily. So
Mm-hmm.
that's where it can really eat up. You don't have to move forward in the apartment building, but you may be out 10 grand and you found something that,
Mm-hmm.
either you can go back to the seller and try to renegotiate, or how much it's going to cost to fix these things. And then they may not work in your financials.
Mm-hmm. One of my recent guests was sharing how in Port Hope, I think you know what that is because you cover East End too,
Yeah, yeah.
how some buildings were being bought firm and a 9-unit apartment building was bought firm.
Wow. I've seen that too. It's gutsy for sure. I don't know if I would do it, but it's the same premise. If you're buying it for a low enough price that your buffer is in there, then you may feel confident. But you have to really know your numbers, I'd say, to do that.
Yeah. Like that's who, folks. This is not a recommendation. Because I remember 10 years ago, it was almost a new thing to be buying property sight unseen, apartment buildings even.
It was. I at the beginning, as a new investor, I was like, I have to see the property. I got very, very quick. Most of my properties are in Hamilton, as you know, and I bought many sight unseen, knowing that I have 5 days to get an inspector through. I know if I can second suite that, I do all within that 5 days, just like I would in an apartment building. I just may have more time,
Mm-hmm.
but I don't need to see it. My financials make my decision for me, not emotion. So
Mm-hmm.
I can make that decision based on financials. If I walk away, I can walk away, but there's enough there for me to learn a little bit more. And
Mm-hmm.
given the competitive environment that we're in, if I see something and the numbers work, I'm going to place an offer, and I'd have every intention of moving forward with it unless something is brought up or to
Right.
our attention.
I find it helps to know the business well, which includes knowing buildings well. So if a building's for a certain era, you kind of have an idea what to look out, what you're expecting, right? Versus for
Very
a
true.
novice, they have no idea.
Yeah, we were learning on our first apartment building too. Like our first one was out in Midland. I was afraid to go to the GTA.
Mhm.
And there was, many times. I think I was telling you, "Oh, I'm going to put an offer on an apartment building," and this was, 3 years before we bought our first apartment building. And always gun shy, always gun shy, always like, will I move forward with that? And then it's like anything. I think when I first started a meetup, it was, oh, I'm scared. There's always that fear, but when you do it, you're like, why didn't I do this sooner?
Mhm.
And same with apartment buildings. We bought one and we went out and bought several more within 2 years. Because within this industry, if you have the right backing, raising money shouldn't be an issue as long as you have the right backing. You can manage the asset and manage people's expectations, and especially from a financial point of view, to give them an ROI. If you find the right investment, you're gonna have people that are gonna want to invest with you.
Mhm. Awesome. Oh, and then this permit. What are you doing renovations outside this existing structure? Did you say you're adding units?
We're adding units. Oh yeah, this is. I can go on for this building. Like there was squatters. We had a crack baby. Unfortunately, was delivered in the building while someone was being
God.
evicted. The sheriff was in there. We were written up in the Hamilton paper. I think our architect got bit in the leg by a dog in the building. They weren't allowing us to come in. We bought the building half tenanted. When we took possession, it was fully tenanted, and that's kind of it became the new squatter residence. And so we had to board it all up. We had to work with the tenants to transition them, and then now it's still sitting empty. So we got to the demolition phase. We can't do any renovations, but we're just waiting.
Wait,
So we're
wait. What do
sitting
you mean
burning money.
demolition phase? You're
We're able
demoing
to demo
inside
it.
the units.
And
Wait,
what was that?
wait. You said demolition. Are you tearing down the building, or you're having to tear out what's existing in the units?
Just inside the unit. Sorry, we're demoing the entire building. But we're doing exterior and as well as interior. Like that's our renovation budget is well over $1 million for this.
Right.
But everything basically gutting down all the units.
Mm-hmm.
A new floor plan for every single floor,
Mm-hmm.
and then trying to maximize as many units as you can within there and what's allowable within the zoning.
How are you maximizing the floor plans? Like, what was it before, and what will it be when you're done with it?
It was at the beginning was used as an 11 unit building. It was not managed properly for, I'd say, for the last 2 decades. So first thing we did was approach the city and say, what's allowable within zoning? It's right on Main Street in Hamilton.
Mm-hmm.
And we looked at, there's a lot of opportunity in terms of a massive parking lot in the back that still uses parking, but a zoning that allowed for many, many more units that we were trying to even go for. So the building financially made sense even by just legalizing the number of units it was used for. It was a legal 11 and it was being used as a 12. We approached the city and said, let's put a 16 unit in here.
Mm-hmm.
And now we're going back and forth the city between a 16 and a 14. But
Mm-hmm.
net, we're going to add units within it.
Are the new units within the existing structure, or do you have to go outside the structure?
In the existing structure. So we didn't add anything to the building. It was basically working within the floor plan. Same with another building we have just down the street from that. They were all 8 one-bedroom units. We just configured the units to be 2 bedrooms. So they're smaller 2 bedroom units. However, from a dollar-wise, buildings are valued based on how much revenue they generate. So I can charge a higher rent for a 2 bedroom unit than I can for a 1 bedroom unit.
Mm-hmm.
And that's basically where it comes down to in terms of increasing that value and making that building worth it for us, where as a one bedroom, it wasn't going to work for us.
What was the 1 bedroom rent?
The rentals at the
Yeah,
time.
yeah. How
Oh
much did
yeah, you
one?
go back when I first purchased it, they were like we purchased it, they were $800 or $900 for a one bedroom, and now you
And
can rent. And when they're completely renoed, I think we even said our projection said we're going to get it for 1,200, and we're just going up. We're just finished our renovations. We're just finishing them up on that one, and we're 1,450. I think we're right now advertised for, so way above projection. So investors are quite
right,
happy in terms of we're typically over exceed our projections. We're quite diligent in our underwriting, and we put a lot of buffer in there for upside.
right. And then what was your budget to renovate for each unit to convert it from a
Each
1 bedroom
unit,
to
that
a
was a
two?
bed job as well. So I think unit by, I think that came into, if I break everything, there was asbestos within that building as well that we had to take care
Fun,
of.
fun.
So I think it did, yeah, it did come down to, I think somewhere between 30 and 40 grand a unit,
That's not bad.
which
And
you
it
could
was
do lower. Like if you're not doing electrical, plumbing, and more cosmetic, you can be in the 20s. But when you start tearing down everything and doing all the wiring and taking out knob and tube and galvanized piping and all of that, then it does climb up very quickly.
right. You
Not
knew
to
these
mention
things in the
asbestos.
you uncovered this stuff in the inspection, right?
We did, yeah. So asbestos, I wouldn't have purchased the building if we knew. So we had to actually negotiate with the seller to bring that price down.
Yeah,
We had the asbestos company come out and do that testing while we're still in due diligence to find that
right,
out.
right. And so like caution to the listener. This is why we inspect. Like the guy that bought a 9 unit firm and he doesn't know what's behind the walls. Like, that's not a fun surprise. Do you know what your bill was just for the asbestos, for example, or the galvanized steel? Like that's significant. Those are significant
Yeah, the
renovations.
asbestos cost quite a bit. Like if I put in all the repairs, like not just taking down the ceiling, but
Yeah,
these guys look like they were from Outbreak, the movie Outbreak, when they came in. Like everything was boarded off, but just the asbestos bill alone, I think, was well over 50 grand.
that wasn't that bad. How many units?
That was just the one side, the 4 units.
Damn, that's a lot of money.
That was a lot. It was a lot, yeah. And then another 22 grand to the ceilings and everything on top of
Right.
that. And that's
Yeah.
why your per unit goes up.
Yeah.
Where we were a little more fit. That was phase one renovation. Our phase two, the asbestos we were much more efficient in terms of
Right.
how we did it. But still, a tremendous bill. And then there's the ones that you knew before going in, so it made sense financially, but
Right.
you still got to deal with it.
And you had to replumb?
Yeah, we did do everything, like new plumbing, new electrical, new
Electrical.
everything.
Oh,
Yeah,
fun.
yeah, and there's
New walls.
ironically, started new everything right back to the studs. Like we were right down to I saw brick.
Right. New heating system? Did anything stay?
No, we still replaced the boiler, but it was all on rads. So we kept the existing one, but just replaced the boiler. But no new system. We didn't put forced air or anything like that in.
Did you install air conditioning of any sorts, like split system or anything like
No,
that?
so that's another one that no, we did not do that yet. We likely will go down that route. I'm looking at the 16 unit as well. We are going down that path. We are putting fob entrances when we first start for entry and just making them a little more upscale.
Mm-hmm.
I'd say air conditioning we're going to likely have to put in or allow the tenants to put in.
Yeah.
We're working with the city right now is more on the wattage and with Electra. So there's a lot of back and forth. If you are working with the city and working with permits, there's a tremendous amount of work in terms of getting Electra on board, getting the city on board, making sure there's enough wattage to go in there, because we're taking an 11 unit or 12 unit building, making it a 16. There's only so much power that can go unless you put in
Right.
new lines.
And then if you want to add air conditioning.
Yeah, and
Pulis does
I
air
look at myself. Sorry?
Pulis does split systems in the ones I've seen.
He does,
Kyle,
yeah. So Kyle Pull, yeah, they put them in all their units.
yeah, it's electric, right?
Anyway,
So then the hydro's paid for by the tenant. And
true.
I think their
Yeah,
units also do heat. Their splits do heat
we will
as well.
likely put them into each unit afterwards. But we didn't do it on this stabilization phase. We didn't do it.
Not cheap. It'll take up space as well. Hopefully you have balconies.
Takes us
You have
space and it's
balconies?
not cheap. It comes down to financials, and this is not like those first homes that I bought myself. I have investors involved, so you have to always work to maximize their return too. Not to say afterwards, once we stabilize and get money back in their pocket as a shareholder loan repayment, then we can tackle air conditioner.
Awesome. No, so what about the stock hacking thing? Were you skeptical? You must have been skeptical. Who wasn't skeptical?
I was scared. I think you introduced it to me a year before I even started it. It's kind of like real estate investing. I bought my first property in 2002. I didn't really get serious until like 2014 or 2013. So it's one of those things you slowly build up the information. And you know what it was for me? It was, I think, same as you, is on that 8-unit building we have, the electrician, ironically, was Adriano. And I saw him on your podcast, and I'm like, oh my gosh. And I know Adriano as well. He's our electrician on our building. I see him there, and I go, okay. And he made $100,000 in his first year, I think, too. And I go, okay, that's there's something here. Even though I didn't really know all of how it worked, I traded options in university. But after going out and taking the course, I realized I was in kindergarten back then. You look at it from a completely different mindset, a different point of view, as the seller rather than the buyer. And previously, the stock market to me was a lottery system. I'm going in, I'm hoping. I'm always hoping for something to happen. Here, I'm hoping for something to happen, but I have a very, very low likelihood of any of that happening. And I just want to hit singles and basically just chip away, rather than just trying to win the lottery. And that's kind of like real estate investing. It's, there's no get rich quick scheme at all. It's chipping away. And then, when you're actually getting through it, you're building up a significant amount of wealth.
It's a tough question. I'll ask this financial planner next time when I have her on. How much of your tough question, like the question I'm trying to get at is how much net worth should you apply to all these areas between real estate, because for example, I always bring up Tiger 21. Are you familiar with Tiger 21? Yeah, a lot of us real estate investors are familiar with it. For anyone who is not familiar with Tiger 21, it is I don't even know what kind of club they are. Are they an investor club?
It's an investment club, but you have to have a 10 million net worth to be part of. And they invest in equities, they invest in real estate, and invest but it's essentially an investing community.
It's an investing community, 10 million investable assets. And their three largest allocations are in order is real estate, and then public equities, which in my opinion includes stock options. I could be wrong. And then next is actually private equities. And we actually meant to get to that because how much time you got? You have more time? Can we talk about REITs?
No, I'm actually good. My wife's picking up our kids today.
Sweet. We'll get to that.
I'm good.
So I would bet you any money that the folks who listen to this show and people in our community, public equities are nowhere near similar size to their real estate portfolios in terms of their net worth.
For sure, I agree.
Yeah, I even struggle with that answer. I got into real estate for cash flow reasons, and because I've leveraged so much, because the cash flow is not as good as it used to be. But that's what allowed me to acquire more houses. So then my philosophy is almost, I have my houses not to cash flow, but to create wealth for me. All this immigration, all this cheap money, all this low interest rates. I heard HSBC is offering 0.99 on a variable.
Yeah. I net worth at HSBC, that was brought up for sure.
So then I can predict, my theory is that real estate will keep going up in value, but my cash flow won't necessarily improve. But I'm making all this cash flow and stock hacking. I actually don't even know what to do, because I know people selling their investment properties to fund their stock hacking further. I'm not even sure what the answer is.
It's a tough answer because
it is, yeah.
Sorry,
it's all kind of new. It's all kind of new.
You've been doing it longer than I have, and probably you're getting educated much more than I did. This is for sure a big thing within my arsenal. However, I'm not going all in and selling all my properties to do it. I have a pretty good real estate portfolio, so I could sell one if I wanted to, but I didn't need to. So will I put more into it? I could, but the beauty of this strategy is you're compounding your money every single month. Where real estate, you're not compounding until every single refi. So you have a big opportunity there. Just if you're making 1 to 3% a year, a month, you're making more than that because you're compounding every month. Where if you start with the 10,000 or 20,000, you got 22,000 that next month. So you're starting, your base is always getting higher every
Mm-hmm.
single month. We look at real estate, you look at simple interest, you look at what is my yearly one. So there's so much benefit within this strategy. However, I know real estate extremely well. It's
Mm-hmm.
something that is done extremely well for myself.
Mm-hmm.
And as you said, when I first got into real estate, when I quit my job, cash flow, cash flow, cash flow, active income, how am I going to support my family?
Mm-hmm.
And it's shifted because stock hacking has helped for sure tremendously in terms of I know I'm going to be safe from the cash flow front. So let everything else become generational and wealth building, long-term
Mm-hmm.
wealth building.
Mm-hmm.
And that's kind of what it is for me, where or most people, it's how do I manage active income versus passive income? And active income is how am I going to put food on the table next month? Passive income is how am I going to live very comfortably in my retirement age and not having my kids need to worry about money like
Mm-hmm.
my parents did and we did growing up and all of that. So that's what it is for me. It's cash flow becomes secondary because of stock hacking. I know exactly what I can make every
Mm-hmm.
single month. And I know I don't need to make that every single month, but I know the odds of me not making it are much, much lower than the odds of me making it. And that's the
Mm-hmm.
beauty of it. Where if I go
Mm-hmm.
into stocks, we all know the stock market is not based on the company, at least for the short term. It's based off of people's confidence in the company. So it's
Yeah,
based off consumer confidence. It has nothing to do with how well the company's doing, although they should be related.
should
But
be.
you can have an Apple stock shoot up with no company news or shoot down with no company news because it's all confidence based. That's what steered me away from stocks for a long time. I
Mm-hmm.
lost a lot on the .com boom, and you said it best. I think every real estate investor is just a failed stock trader, and I fell straight into that bucket. And I'm happy to say that no, you can actually. There's a lot to be made within stocks
Mm-hmm.
and equities if you do it correctly.
If
And
you do it
you
correctly.
got to flip the mindset though. It's I got into real estate. Why am I going to use leverage in my own home to go out? Everything I've learned has taught me not to do that. Don't mortgage my house. Don't leverage my house because I'm taught to go to school, buy a house, pay off that house, live debt free. Now I'm like, that's not the best advice. And same thing with stocks is don't look at it from trying to buy and win the lottery. Look at it from selling and selling things that have a very, very low likelihood of actually going in because you have other people that are plethora of people trying to win a lottery. So
Mm-hmm.
I basically go low probability stocks and you make a little bit of money, but 9 times out of 10, they're not going to hit. And I'm not going to go through the strategy here, but it's something that we always say someone who's in real estate investment is get to the point of there's something here to learn more from
Mm-hmm.
rather than just discounting something. There's something
Mm-hmm.
there within real estate and within stock hacking that maybe deserve a little bit more of someone's time.
Oh yeah. Like for yourself, are you confident you can earn six figures every year going forward?
Yeah, I'd say for sure, especially with capital going up, I can be as capital goes up and compounds every single month. There's your number of what you need to live on stays stagnant. Like my changing my lifestyle is very healthy. I don't need to change and become a Bitcoin typhoon and buy $28 million condos or anything like
Condo,
that. But I live very
$17,000 condo
comfortably.
piece.
So yeah, it's a different lifestyle still, but I look at my lifestyle. I can take a trip. I can go away for 3 months with my kids. I talk about with my wife all the time. We're like our kids are still young, but they're young enough that I can pull them out for 3 months and go live in Australia, and I can still run my business by living in Australia for 3 months
Mm-hmm.
and then come back. And that's the flexibility I always had when I quit my job. Is let's have the financials taken care of, but then let me live my life. And it's like Rockstar says, are great. Let me live my life on my own terms. And
Mm-hmm.
that's exactly like these two vehicles and now stock hacking in this last year give me the confidence that I know I'm doing that and I'm going to continue to do that.
Just sucks with the time zone in Australia.
Oh, it does. Yeah, I lived there for a year. It was one of the best years of my life. And I lived in Europe after that. But yeah, the time zone and being away from family.
Yeah.
This time of year, I lived there over Christmas too, and it's like seeing Santa on a palm tree. Just didn't, you don't. I love
Uh-huh.
Christmas, and
Uh-huh.
family is really important to me,
Mm-hmm.
and you just don't have that Christmas as much as you do when you're over there and you don't have family and you see Santa and you're going to the beach that day.
It's not bad living. I meant time zone in terms of like the hours the market's open.
Oh, from that sense. Oh, sorry about
Yeah.
that. Absolutely right. Yeah, yeah.
Yeah. I
You
mean,
you may want to play in different markets. They have their own stock exchange, but you're right. New York and
mhm.
everything. You want to play with it this time zone.
No, we were talking before we were recording about your consideration for a REIT. So what have you why did you consider a REIT, and then where are you in that thought process?
Still very introductory, and I don't even know if it's going to go through just because I'm very comfortable in terms of where I am. I'm very comfortable in terms of doing a syndication on our apartment buildings. REIT allows us to get much larger. I'm wearing the 10X hat. It allows you to 10X and really 10X and go much, much more beyond what you're doing before. We thought a lot about REITs. Most of my friends from school, I went into marketing and went to corporate marketing. A lot of my friends in the financial services industry. So I did have some knowledge in that in terms of REITs, and also from the US, brought to my attention that there's only multifamily REITs or commercial style REITs in Canada. There's no single family REIT. So that was the initial thought process that we had, is we started to really know single family conversions into duplexes going, can we start to mass this out and just create a fund, very much like Kyle and the Pluises did. And that's still part of our option, or what I'd like to do. But understanding the Ontario Securities Commission and getting through all that and being able to take retirement funds, still a learning curve for me. So I'd have to bring in somebody that we are still talking to, but I'd still say it's just a thought at this point. Will it come to process? Potentially, maybe. There was a lot of things that we were going to try to do, and it's just going through the motions. But one of our biggest investment partners has their own MIC. So we're set up that we could go down that path, and they have a whole private lending enterprise, and they're our largest investor. So they have the infrastructure, so we could do it. It's understanding the financials and getting the right partners. And there's so much going on still right now that do we want to add another pillar to the business? So
we talked
will I
earlier.
do it? I'm not sure, but I'm interested in it.
We talked earlier how there isn't really any returns in the stabilization of apartment building, and the appetite of investors for that. Is that one of the challenges of starting a REIT, or is the REIT expected to already have property?
Later on, once you have an established one, it's great, but it's hard because typically investors, when they look into it, especially if they understand REITs or they understand apartment building or property investing, they know they can get a higher return, so they're expecting a higher return. If you're talking to someone that is, they're happy with their 7 or 8%, it's usually it's just getting past the real estate hurdle in their head, and they can make much more of it. But the hard part is especially when you're starting out with even a single family home or apartment building, there's a stabilization period, and that could be with an apartment building up to 2 years of transitioning tenants out. You may not get paid back. Typically, if you go into a REIT, there's some preferred value that they're giving them upfront. It could be 6%, it could be 8%. You're constantly paying that before you're even bringing in revenue sometimes. So you may have to overraise. You may have to basically make sure you have enough cash flow to do that on a month-to-month basis and provide that preferred return. And then once you can refi, you will have to continue that preferred return and have the ability to purchase more assets. So understanding all of that, we've had spreadsheets and gobs of information, and trying to make that work. Where is there enough meat on the bone there for everybody involved? Because you can't value it the same. Like you're putting a REIT out there, typically, or a JV, it's on an apartment building, could be on a very small one, still a 50-50. It could be a 60-40. But as you go into a REIT, it becomes much, much less so on how much ownership you have, and you become much more of a management person, and much more of the ROI goes back to the investor, where you take more of a fee in terms of acquisition, in terms of management and things like that. So it's still for sure a learning curve in terms of investors having a certain demand for ROI, and us evaluating everything we have, and can we give them something like that, but still give them a higher ROI than they're used to seeing there in other traditional mutual funds or things like that as well. Because we want to definitely give them over double digits. We don't want to be somewhere being 7 or 8%, and we're consistently at, we always say we're going to give you 15 or higher, and that's typically what we say, even though we've been very fortunate to be somewhere upwards of 20% or higher. But when there's a constant give, it's harder. When you can do a refinance and you can stabilize a property and then get back to the investor, and you have them on board for all of that, then it's easier to do. But a REIT is a whole different beast. So we're still working through that.
Amazing. Martin, I'm going to give you the final word, and then I'll ask you, where can people follow along with you?
final word for me, I'd probably say just to you, like Erwin, you within our circle of friends, like even friends or real estate investors, you realize that it's a small circle, but you're the one who introduced everybody to this. Regardless of where we get our information, you're the one that brought it to light. And there's other people doing investing. There's other people, I do very similar things, and we're still both friends too, in terms of the real estate side. And that's the great thing I love about real estate investment. I worked at Coke, and if I went out, and Pepsi's blue and Coke is red, if I went out and rented a car that was blue and I worked at Coke, you'd be reprimanded for it. And that's why I love real estate investment, is we're all into some aspect, maybe competing, but we're all still friends. And that was more important to me in terms of having a competition. It's not a competition. There's so much room out there for all of us to grow. And if I relay that to stocks, and we're all real estate investors at one point, but you open up the light in terms of a whole other world for a lot of us. And even though there's other places people go to, this is all you're doing, and like, congratulations, bud. Like, you did a lot in terms of monetizing that and bringing it to light for all of us. A lot of respect for you there.
Thanks, Martin. I'll EMT you that $100 over you.
You're not gonna give me anything for
that. For anyone who wants to follow along in your journey, where can they follow you? You on TikTok?
Sure.
Snapchat? Where are you at?
I'm on Instagram. I'm on. I don't know if I'm on TikTok yet. Instagram, LinkedIn, Facebook. Like, look up, and regardless of anybody that you work with, we always say do your research on them. For me, my website is mkproperties.ca, and look me up. Just Google me, Martin Kuev, and you should have some digits and information there. But go ahead through the website, and I'm out here. I'm still working away.
Awesome. Martin, thanks so much for doing this. Thanks for going over time. Good catching up with you. Great catching up with you. Oh, and by the way, I'm in the middle of moving. So for listeners, you won't know this, but I've been poking Martin on and off about having a nanny.
Oh my God.
So while I'm here working, my nanny's purging my storage room right now.
Oh man, we're gonna go this route. Oh, it was killing me getting your text. I was getting your text, and we chose to go the other route. We actually went down the route of a nanny and having them from overseas, and it didn't pan out with but I wish I had a nanny. I still wish I did. And you love to just turn that knife and squeeze it.
There's times I haven't sent you texts.
It's been a while, but every time I see them, I'm like, oh man, it still gets me. I think we wouldn't go to the point of getting a nanny, but I think getting cooks, and we already have cleaners and that, but cooks and preparation and that's something we're still discussing for sure.
I remember that. I think there was this one time I just got home from the gym, and my lunch was on the table, and I took a picture of it and I told you the commentary. It's so nice to come home and this food's hot and on the table for me waiting.
I've gotten many texts from you like that.
Martin, congrats on all the success. You're killing it, man. Keep it up. And thanks again for doing this.
I appreciate it, Erwin. Thanks for having me on the show.
Thank you.
Thanks, bud.
Hey again, folks. As I record this, the date is New Year's Eve, and I'd like to take a moment to say farewell to the year 2020. The pandemic changed our daily lives and will continue to do so in 2021. I am grateful to have my investorpreneur community, our clients, students of Stock Hacker Academy, and you, the listener. I was honestly afraid, just like everyone else. We deferred a mortgage or two. I took a CERB payment, which I've since paid back. But servicing this community kept me focused. There was no time for woe is me. I had to find answers to what was going on in the streets, both real estate and the stock market. Hence, we had our emergency series of webinars. My apologies for the poor connection, poor audio, poor video. My internet connection hasn't been the same since the pandemic started. Those webinars, this podcast, our iWin meetings were my outlet for focus and to share with you the best practices and help you all be successful wealth hackers. That's always been my number one goal. The road was definitely rocky, but with the vaccine here and being rolled out, and more importantly, how our investments behaved, I think that's the ultimate testament that we are investing the right way, and that only has me more optimistic for the future of our collective investing in 2021. I know my clients in real estate investing and stock hacking are optimizing their returns, and I hope you are too. All the best in 2021.